So it's 5:26, and this is the Town of Moraga Audit and Finance Committee meeting on Tuesday, May 30th, 2023. I'm calling the meeting to order. Roll call. Mayor Sauce?
Here.
Committee Member McClellan?
Here.
And Treasurer Kennedy is here. Let the record show that Member Wallachy and Lou are absent. This is the next item on the agenda is public comments and suggestions. This is time reserved for those in the audience who wish to address the Audit and Finance Committee on items that are not on the agenda. The audience should be aware that the committee cannot discuss details or vote on non-agenda items. Your concerns will be referred to staff or placed on a future agenda. Note that public input will also be taken during each of the agenda items. Are there any public comments? Seeing none, I'll take it back to the committee. And the next item is approval of action minutes for our meeting of February 7th, 2023. Do I have a motion?
I move approval.
I will second that. All in favor?
Aye.
Aye.
Abstain. Yeah. Abstain.
So 2 approvals and 1 abstention. And then we move to the next item, which is consider the proposed fiscal year 2023-24 and fiscal year 24-25 biennial operating budget. And I guess, Annie, that's you.
Well, we could defer over here.
Okay.
Mr. Chair and members of the committee, I'm Scott Mitnick, the town manager, and I'll provide some opening comments, and then we'll have staff make some presentations, and then at the end, there'll be room for questions. So, as articulated in the document that was sent to you, we're in the middle of a budget cycle. So the way we're going to structure this is our finance director or administrative services director, Annie too, she will start out and give an overview of the process, where we are. She'll talk about the budget as a whole for all the funds very briefly, and then she'll zero in more on the general fund and talk about the revenue estimates and the proposed appropriations. And as a reminder, this is the first time that the town is using a biennial budget format, which is 2 one-year budgets. So by law, local governments in California have to do one-year budgets, but you can do 2 years at a time or more if you like, but it's an annual appropriation process. So after Annie goes through her stuff, I'm going to make some comments in certain pieces of it, but she'll give her presentation. Then Sean Knapp, our Public Works Director, he will then walk you through the proposed capital improvement program budget. And then at the end of that, I will do a summary of the challenges and opportunities. So feel free to ask questions along the way, as well as at the very end. So I'm going to turn it over to Annie now. Thank you.
Good evening. My name is Annie, and I'm here to present the proposed fiscal year 23-24 budget.
Your mic's not on.
Sorry. Good evening. This is Annie, and I'm here to present the proposed fiscal year 23-24 and 24-25 biennial budget. I'd like to first give an overview of the budget process. We started the budget cycle in the start of our new fiscal year. Our new fiscal year begins on July 1st of every year, and in August to October, we do the closeout and we work with the auditors on our audit. From November to December, we do our year-end reporting and finish our comprehensive annual audit. In January of each year, Town Council develops the Town Council goals, and in February, during the mid-year, we present to our Town Council the mid-year budget status. And from March to April, we work on developing the budget to finalize the budget. And in May, we have a budget discussion with the town council, and we also adopted the master fee schedule. And finally, in June, we have the budget adoption, and I'll go into more details about the budget timeline. So,
Annie, I'm sorry to interrupt. Would it be helpful before you really dive in to just kind of set the table for us on what our role is today?
oh, sure, I will do that. So, thank you for that reminder. So the committee, Finance Committee's role is not to recommend, is pretty much we're presenting you the budget. We like to receive your feedback, and that's your feedback and comments. Is not to recommend anything to the town council.
So if I have it right, I mean, what is most helpful to staff is for us to provide comments both on the substance of the budget and the CIP, but also on presentation to the council and
Correct.
making sure that things are understood and presented in a way that makes it possible for the council to make a decision.
Yes, that's correct.
Okay,
Thank you
thank
for
you.
that reminder, Ms. Oz.
I'd also add to that, and I apologize. What you see in front of you is a work in progress, so we don't have all the narratives yet wrapped up in the forms of what we'll talk about. So it's an evolving process. Yes?
Mike.
As I was mentioning, your role, as Annie pointed out, it's advisory where we get to work out the kinks and the bugs, including how to use your microphone. So apologize for that. The document in front of you is a work in progress. We have yet to finish the narratives when the town manager budget message is not yet done. So apologize if there's typos or incomplete items in there, but it is a work in progress, and your role is that of advisory. But feel free to ask whatever questions and make whatever comments you like as we go through this process. Thank you.
Thank you, Scott. Okay, next up is the budget timeline. This is a comprehensive detail of what was done throughout the year. On February 15, 2023, Council discussed Mayor's proposed Town Council goals for 2023. And then on February 22nd, 2023, Council adopted the mid-year budget adjustments and Council goals for 2023. And in April 12, 2023, Council provided input on the proposed 5-year capital asset replacement plan. And on May 10, 2023, Council reviewed and provided input of the 5-year CIP, which was presented by our Public Works Director, Mr. Sean Knapp. And on May 24th, 2023, Council adopted the fiscal year 23-24 master fee schedule, and that schedule will become effective on July 23rd, 2023. And finally, on May 30th, 2023, the Audit and Finance Committee reviews the fiscal year 23-24 and fiscal year 24-25 proposed operating and CIP budgets. And this is what we're doing tonight. And in the future, on June 14, Council is going to review the fiscal year 23-24 and fiscal year 24-25 proposed operating and CIP budgets and provide direction to staff. And finally, June 28, 2023, that's our last budget hearing. The Council is to consider adoption of fiscal year 23-24 and 24-25 biannual operating and CIP budgets. So that pretty much summarized the budget timeline for the town. Next is compliance with townwide goals and priorities. What this budget does is it's a very status quo budget. It's very lean, and we're not adding any new positions. We just want to support townwide council goals and priorities. It's just gonna list all of these. Obtain better mix of housing and revitalize town's 2 commercial areas. Maintain fiscal discipline. Complete second year of 2022 through 2024. Ward Street's first pavement reconstruction project. Continue storm drain operations and maintenance programs. Support high-quality police and emergency response services. Enhance town's parks, open space, and facilities. Pursue measures designed to improve traffic, pedestrian, and bicycle safety. Work with Chamber of Commerce, St. Mary's College, and local school districts. Continue outreach with the public. Continue to work with Wedgwood to address hacienda operational issues. And these are the final set of goals and priorities. Onboard our new town manager, Mr. Scott Minnick, and streamline town council meetings. Lessen the town's impact on the environment. Conduct town council, town manager study session on effectiveness and organizational competency. Finally, initiate process of amending townwide noise ordinance as necessary. So these are the 14 townwide goals and priorities that council has developed and adopted.
And
Go ahead, Scott.
you want to ask something? All right.
Yeah, I just wanted to add, Amy, that the goals are kind of the starting point for the budget, and as staff is prioritizing where the scarce money goes, it looks to the goals to see what the council priorities are. So these goals are actually a very important foundation for the budgeting process.
Definitely.
Well, the mayor's comments just shows how in sync the mayor and the town manager are. I really like to stress, you can measure the strengths and the success of a local government organization if they do this. So in cities and towns, we want to start with the governing board telling us what the priorities are for the upcoming budget cycle. And that's what the council did back in February. Then what the town manager and the finance director and the department heads do is say, okay, this is our starting base. How are we going to provide funding to do all this? And that's what we start with. But we also follow council direction that's provided throughout the year to do certain things in capital projects and the Measure K implementation and that type of thing. So it's very important for you in this role just to understand that's our starting base. We don't sit here and say, we want to do this. We take the direction from the council and we give them a proposed spending plan to implement their direction.
Okay.
Annie, I apologize for interrupting so much.
Oh, no, this is great. It makes the meeting much more interesting than just me talking. General fund sources. So this is a chart of the general fund sources, and I just want to show you in terms of how it compares, the budget compares to actual. Is my mic on? Yes. Yes. Okay, thank you. Oh, it's not really pointing. Yeah, but it's not pointing to the screen.
That's the light.
Oh, okay. Well, all right. So I'll go from left to right. Actual fiscal year 21-22 revenues total about $9.4 million. And the current amended budget, which is our current year, is approximately $9.8 million. The proposed two-year budget I'll refer to as year one and year two. So year one is fiscal year 23-24. That totals $10.4 million. And year two is proposed fiscal year 24-25. It totals $10.8 million. So as you can see, revenues is steadily increasing. And we also have some transfers in. Transfers ins or transfer from other funds. In fiscal year 21-22, we have approximately $1.4 million. And in the current budget, we have 3.2 proposed. We're proposing about 1.9 million in transfers, and then in year two, we're proposing about 1.6 million in transfers. So as you can see, the total budget for the next 2 years for revenue, general fund revenue, is about $12.3 million in year one and $12.3 million in year two. Pretty steady for both years.
Annie, one comment. You might want to, on that budget number, put in it it's the amended or includes
Here?
any adjustments from mid-year.
Yes, yes.
You might want to actually amended budget or something like that.
Adjusted?
Adjusted.
Yes. We were contemplating that, but it looks a bit odd because it went into 3 lines. But I will certainly add that, adjusted budget.
Annie,
you.
do you want us to hold our questions till you're through, or can we ask as we go?
Oh, it's very informal, whatever works.
Mr.
Yeah.
Chair, how do you want to do this?
I think ask as we go, but if that starts to break things up too much, then maybe we'll.
Okay. May I ask a question? So Annie, so the, from 22, so adjusted 22, 23, actually, can you go to the prior one, revenues?
The prior graph.
Prior chart, prior slide. There, yeah. So, and I think Bob's comment would be the same for this chart about make sure that FY 22, 23 is adjusted.
Yes,
Titled adjusted.
yes, I'll make that change.
Yeah, so if I'm reading this right, so the difference between 22, 23 adjusted and 23, 24 proposed is 6%, is that right?
I'm sorry, repeat that question. The
Difference between adjusted 22, 23 and proposed 23, 24 revenues is 6%, if I'm reading the general purpose fund chart right?
Roughly, yes.
Roughly, okay.
Yes.
Which is roughly twice what it is in other years. And is there a reason for that?
So revenues is composed of many different line items.
Right.
So the report, the packet that you have received details each and every line item that makes that total change. So if I can please refer you to attachment C in your packet. So the attachment C shows all the details that makes up this revenue number. So it's all rolled up into the total revenue here. But if you want the detail of each line item, so each line item, the percentage change varies.
We have a slide coming up that basically points out we're assuming a 3% increase for most revenues unless we have actual data and empirical evidence to suggest otherwise.
Right.
So
Okay.
do keep in mind we're in a high inflation environment right now, and we did have some revenues like property tax, and there's a lagging period on that, so values went way up. There were sales of homes, and so the increased property tax revenues are coming in now from sales from a year or two or three ago. So there's a variety of reasons why the revenues are up what they are, but they're really not quite keeping up with inflation.
Well, if I may suggest, when this is presented in June, let's say that up front,
Yeah.
right? The assumptions are conservative. It's generally 3% unless there's like evidence that it's going to be more.
Well,
That's what goes into the mix, because if I'm looking at this as a council member, the first thing I'm thinking about is, okay, what are the percentage differences? Are those assumptions reasonable? Are they conservative? Are they aggressive? And just to explain up front, I would suggest explaining up front if that makes sense to you.
That's a very good question, and thank you for the suggestion. We do have that here, but maybe I can shift this slide over, because this is the revenue assumption here. General adjustment of 3% unless we have other information that speaks otherwise.
I've got a couple of observations. The property tax number, you actually get figures for assessed valuation, don't you? So
We have,
probably
but
pretty
yeah,
accurate.
It is, yeah.
So
And if we-
it's showing going up 5%.
Yeah, if she could go back and walk you through, Annie will cover these items, yeah.
Okay.
right. Maybe what I can do is, move this slide up before we talk about revenue.
Yeah.
So that way we have the assumptions before we go into the numbers.
If that makes sense to you, but I know that's going to be the first question in
Sure.
every council member's
The other
mind is,
thing
what are
is
the assumptions?
You're assuming much larger interest earnings.
Yes.
She'll, yeah,
Yes.
yeah.
Yeah, that's a great suggestion. We'll move the slide before the chart.
And you might maybe you combine this with the second one, so that you basically say generally 3%, but some things such as property tax where we know, interest where it's up by 300% or something.
Yeah, it went up.
Might give an indicator of why we've got 6%
Right.
increase.
Okay, I'll make that adjustment. So we were talking about general fund sources. So these are the general fund sources for the first year and second year at about 12.3 million for each year. Next up is the general fund uses. So general fund uses are expenditures and appropriations that we're allocating to each department. And so again, I'm going from left to right. The actual fiscal year 21-22 expenditure appropriation is about 9.5 million, and the adjusted budget in fiscal year 22-23 is about 11.09 million. And for the proposed fiscal year 23-24, we're proposing 11.8 million. And proposed fiscal year 24-25, we're proposing $12.1 million. In addition to expenditures and appropriations, there are also transfers out. Transfers out in fiscal year 21-22 total 352,000, I'm sorry. The current adjusted budget is about 1.7 million, and for the next 2 years, we're proposing transfers out very minimally of 114,000 and 116,000. These two transfers out are to pay the debt. Oh, I'm sorry. These two transfers out are actually transferring back to Palos to pay what we owe Palos.
And it's also, Annie, the 1.5 million into the PERS.
Yes, the Section 115.
Right.
So that was a one-time event, so that's not happening in the new.
That's the number in the budget, 20.
Correct. The 1.67 includes that $1.5 million that we transferred.
Okay.
So that totals, for year one, it totals 11.9 million, and for year two, it totals 12.2 million. So that's the sum of all the proposed general fund uses. Next up, projected general fund balances. With the revenue that we just went over and the expenditure, I wanted to talk about what the projected fund balance is going to be for the general fund. Again, I'm going from left to right. In fiscal year 21-22, the operating surplus was 837,000, and then the budget, the current year adjusted budget, our projection is about a surplus of 211,000. Of course, we haven't closed the year out yet, so there's still a lot of expenses that we haven't accounted for. Revenues are still coming in, so we don't really know what it is, but this is according to the budget. It could go much higher. The surplus could go higher. My projection is that it's going to go higher than 211,000, but we don't have that amount yet.
I'd like to point out, this illustrates the challenge when you shift from an annual budget to a biennial budget. So when staff prepares the revenue estimates and the first year budget appropriations request, it sets the stage for what the estimates on the revenues and appropriations will be in the second year, and it assumes that 100% of all the appropriations are spent and that there's no savings and that all the revenues come in and there's no extra revenues coming in. When in reality, because we budget very conservatively, we'll have some year-end savings typically, and that then would normally roll over to the next year. And that revenue estimates are fairly conservative, generally speaking, and we tend to get a little bit more, but maybe a little bit less. So it makes it harder, but I like this because it forces departments to think through, how am I going to get through the subsequent year and then in the future? So it sets the stage to sort of lower expectations a little bit. But I just want to point that out. There's a little bit of challenge here, and it does reflect in the fund balance as well as we project out to the future. We'll cover that in a little bit. Thank you.
Yes, thank you. So the second year, we're projecting a surplus of about $71,000. It's a small surplus because we were trying to balance revenue and expenditure. So in the second year, we're projecting a small surplus of about $64,000. Again, these are projections. It could end higher. Most likely it will end higher because we budget very conservatively. So the projected beginning fund balance for the next year is about $5.6 million, and with that, we are proposing to transfer $325,000 that we transfer from the fixed asset. In this fiscal year, current fiscal year, we transfer $650,000. We're proposing to transfer back half of that amount back to general fund to balance the general fund. That was actually my first recommendation, and it turns out that is what we need to balance the fund. So the projected ending fund balance for fiscal year 23-24 is about $6 million. 5.999, and then the second year is about 6.06 million. So we're still like relatively healthy with this proposed budget. And I know talking to my other directors in other cities, they're struggling on how to balance the budget because so many cities are faced with huge deficits. So we're very fortunate that we're able to do that, and we're able to use some money from ARPA and also some money from transfer to cover general fund for the next 2 years. So next up, I want to talk about.
So let me ask if I understand, the 650,000 was we were favorable above the 50%.
Yes.
By 650 or more than that, and council authorized taking that to the asset.
Yes, it was a transfer from general fund into asset replacement.
So what we're saying is, we in effect are short 325,000. We're going to take it back the other way.
Yes.
Yeah, what happened, Bob, is there's a council policy that was adopted some years ago that said that anything in excess of 50% reserve, general fund reserve, must be shifted to asset replacement. And we talked about this here in this committee, and Annie had recommended that we actually only do like half of it because the rest was needed to make sure that we achieved the 50% reserve. But council followed the policy, and so it's no surprise that we are now shifting 325 back because it was kind of, it was, as Annie predicted, needed to get us over 50%. Is that helpful?
So we're saying the 650 that council, so we're basically undoing,
Half.
and council
Yes.
will need to approve that.
The council will need to approve it, but we were forewarned.
Yeah, and if I could add on that, a great question. So a couple thoughts here. One, in order to balance the budget, our office had to take a lot of stuff out. We took out almost all the planning studies and a variety of professional services and so on, and we told the departments, we'll come back to revisit those studies as we go through the fiscal year to see if we have any savings or additional revenues. And if we do, I made a commitment informally that we'll go to council with a mid-year budget adjustment. But the bigger picture here, and the bigger challenge from my perspective, having been in cities and county, we don't have internal service funds. We don't do de facto depreciation. The vast majority of cities do that. So they'll depreciate assets, and they'll, in other words, set money aside to replace the asset. Take the police cars that are out. Believe it or not, we're not depreciating them. So when a police car goes down, we've got to figure out how to pay for it. And we've been relying on the fixed asset replacement annual contribution to help pay for that. And one of my goals is ultimately to get to a more traditional approach to establish internal service funds and to make sure every year we're budgeting for it. I'm sorry for the long-winded answer, but it's a challenge for us internally to get there.
We used to do that. The asset replacement fund used to charge operating expenses, the operating departments, so much based on the assets they had, and it was put into the asset replacement fund with the idea that there would be money there when you needed to replace the police car to do that. And about 15 years ago, they untangled that. And
I understand
if we were to
why.
move back
Yeah.
to that, I think it would be a more appropriate way to do it.
Yeah, and that is a goal. We would like to get there. And my comments are not a criticism in any way, shape, or form about what was done in the past. It's just, in an effort to be transparent, if you will, we need to show the true cost of running the government. So we'll get there over time, and ultimately it's tied to economic development and some other things. But I just want to point it out. So we are, the reality is, and I was talking to the mayor about this earlier, just one way or another, we will budget and spend money to replace a police car. We will budget and spend money to fix a leaky roof. It's just, how do we do it? And with some discipline, we'll get there over time.
So the projected ending balance is approximately $6 million for the next 2 years. Okay. The top two general fund revenue that is within this budget is property taxes and sales taxes. Property taxes makes up about 50% of our general fund revenues, and then for the first year, and then 52% for the second year. Sales tax makes up about 12% of our year one revenue and 13% of our year two revenue. With that, the total is 62%. Our two biggest drivers of revenue is property taxes and sales taxes. That's almost the amount of our reserve requirement. 62% on year one and 65% in year two. Revenue assumptions. This is what I should have covered earlier. What we did was town manager and I went through all the revenue and we adjust 3%, and if there's evidence that it should be more or less, we make those manual adjustments. And those, again, can be found in Attachment C. Attachment C has all the line item, very detailed line item description of what was changed. And some were kept mostly within 3%, but some we would bump it up, and particularly like interest. As Mr. Kennedy knows, we opened a new money market account, so the town is earning a lot more interest than it used to be. The general fund in the past has budgeted $50,000, and now we're budgeting $250,000 for year one, and a slight increase in year two. So,
And I'd like to interject. The 3% general estimate in each year, that's notably below inflation right now, so it's a conservative number. And some of these revenues should come in higher, some may not come in higher. And one of the rules for local government revenue estimation is if you can be within 4%, you're doing a pretty good job. But we are deliberately conservative on the revenue estimates.
correct. Okay. Property tax. Since property tax is our biggest driver, we wanted to let everyone know the town receives 5.32% of each property tax dollar paid under the Prop 13 assessment. So we get a very small, tiny piece of the total taxes paid. Again, property tax is our largest source of general fund revenue. 50% of general fund revenues in fiscal year 23-24, I covered that earlier. 51% of general fund revenues in fiscal year 24-25. And our estimated growth rate for estimating property tax was about 5% in the first year and 3% in the second year. And this might change depending on, property sales and property transfers. Mayor, did you have a question? I see.
I had a suggestion, but go ahead and
Oh,
finish,
okay.
please, with the next slide.
Okay, next slide is the sales tax. Sales tax is our second largest source of revenue in general fund. 12% of general fund revenue was collected or is projected to be collected in the first year, and 13% of general fund revenue is projected to be collected in the second year. The Bradley Burns 1%, it only shows the Bradley Burns 1% share only. Measure K is booked in other funds, so it's not part of the general fund sales tax. estimated growth of sales tax is about 1% for year one and 3% in year two. So we're projecting that sales will be much better in the second year versus the first year.
May I, Mr. Chair? Did you have something? So Annie, I have one suggestion is to take slides 11, 12, eliminate slide 13, and combine 11, 12 with 14 and 15. So I think it would be most helpful to council if you had, because, you know, we all know that it's property
Yeah,
tax and
it's
sales
very-
tax. It's
okay.
kind of well established. So my suggestion would be to put the key data that you've covered, which is the growth assumptions, the amount that it contributes, right, and the put those either all on one slide, or we have a slide for property tax and a slide for sales tax, but combine them. Does that make sense?
Yeah, just consolidate.
Yeah, consolidate, because so that all the information is in one place for each one.
Understood. Thank you for that suggestion. Okay, so I will remove slide 13. I'll remove this slide.
And I think Bob has a question.
So on the estimated growth of sales tax, is that based on, we have a consultant that provides information on sales tax.
Yes.
Is that consistent with what they're saying? I think the 1% is probably on the low side, and that's fine.
For the sales tax, yeah, it's pretty consistent with their projection because we use Avenue Insights. They're not projecting a whole lot of sales this next year, but in the second year, it's slightly better. The economy hopefully will come back.
And there's some anticipated economic development opportunities that may come online in the second year. So,
The
yeah.
town has always budgeted on the
Lower
conservative side, which I think is the appropriate thing to do.
And we're staying with that tradition.
Okay. Property tax, sales tax. Okay, general fund transfers in. So this chart shows all the other funds that are transferring money into general fund to help us balance general fund. And want to go through these different funds and different transfer amount, proposed transfers. Gas tax, we're proposing approximately $521,000 in year one, $547,000 in year two. Asset replacement, which I talked about this earlier, we're proposing to transfer back $325,000 from asset replacement back into general fund. And then for ARPA, this is our last $310,000 that we're proposing to transfer from ARPA back to general fund. ARPA sunsets in 2024, so this is the final year, and we're hoping to use up all the ARPA funds before it expires. Yes.
I just interrupt you on that, on the ARPA, but that 310,000 is spoken for.
Is spoken for?
Yes, I mean, I assume that those, we know what we're going to use those funds for.
Yes, those are to help with general loss of revenues.
Thank you. Okay,
Yes.
great.
NPDES for stormwater, $249,000 in the first year and $257,000 in the second year. For the COPS, public safety, we're proposing to transfer $160,000 for each year to the general fund. And the public safety sales tax, we're proposing to transfer $95,000 in first year and another $95,000 in the second year. The La Miranda Fee and Financing Authority, known as LFFA, we're proposing to transfer $44,000 that into planning, and then $72,000 in the second year into planning as well. Traffic Safety Fund, this is for the vehicle code violation. We're proposing to transfer $26,000 in year one and $28,000 in year two. Lighting Assessment District, we are proposing to transfer $10,000 each year. And lastly, General Government Facilities Development Impact Fees. There's some revenue that we're proposing to come in year 2, and we're proposing to transfer 52,000 from general government facilities DIF fee into general fund. So the total amount of all these transfers in from other funds, for the first year, it totals $1.74 million, and the second year, it totals $1.22 million.
So as you're going through, this is just a comment on presentation, at least for me and maybe for council, would be, we can read those numbers, but for instance, the $500,000 for gas tax, what's the rationale behind it? My guess is it's repairs done by people who are in the Public Works Department.
Yes.
And it's gas tax money that appropriately can be used for that. But for instance, that bottom one, what's the rationale behind the 52,000?
General government facilities, DIF fee, there's some restriction as to what you can use it for. So 52,000 is some of the revenue that planning is planning to collect in the second year, and they're going to transfer it back to general fund to do contract services. So that 52,000 will go towards the contract services in planning department. It's restricted funding, so you can't use it to fund finance, let's say. So it's...
So why isn't there anything in the first year?
They're not planning to collect much revenue in the first year. It's only the second year. Public Works Director and I spoke with the planning director, and she has some schedule of upcoming projects that are coming up. So that was an estimate that was provided.
Just further to what Bob's point, I think one thing that that might be helpful is to just, some of these fees are just fixed, right?
Right.
I mean, the lighting district, it's the same every year. And I guess maybe as you go through these, just rather than going through each one, but just maybe highlight the ones that are either based on assumptions, based on projections, and again, with an explanation of how you got there. And then I don't think you need to even talk about the lighting district or the other stuff that is the public safety fee. Those are fixed. And so you can count on that, right?
Right.
And so many of these are things that happen year after year.
Yes.
Yes, it's
The cops one.
pretty
The
consistent.
lighting fee, I think, is the cost of
Yes.
accounting for the lighting district or something like that. So you almost don't have to mention those.
Right.
Okay.
Unless there's an exception or there's something.
Yeah, I think that's a great way to go.
Okay.
Is just highlight the places where there might be
Sure.
exceptions, or it's not, something that's year in or year out, year in and year out.
Understood. So I'll highlight asset replacement and ARPA as well as general government facilities DIF fee. So because those are
Right.
different each year.
Okay.
Okay, very good. Thank you.
Thank
Next
you,
up.
Bob. Good suggestion.
General fund appropriations. In general, we're not proposing new services and no new positions, with the exceptions of the town clerk admin assistant that we convert from 0.75 to 1.0 FTE. This was approved by town council during this fiscal year. For next year, we're not proposing any new positions. We're honoring the MOUs that the town has, the labor contract. We're complying with the contract terms. So we're honoring the 3% that the employees are going to be receiving starting in July 2023. And some of these costs are escalating due to the fact that general liability and workers' comp insurance are escalating. In overall, the insurance industries are really hurting because every city has the same complaint that these insurance are, going up and up every year. And also CalPERS has increased slightly, not too much, but it did increase. And General operations and maintenance increases due to CPI and minimum wage increase. I mean, overall, inflation has just, gotten higher and higher. Personnel costs.
Could you back up
Sure.
that one? So the CalPERS, how are we accounting for the unfunded liability portion versus the current? The current gets spread out to all the individual
Yes, that's correct.
departments. Is the unfunded liability in one lump, or how are you doing that?
Yes, that's a very good question, Mr. Kennedy. So basically, with the current portion is a percentage of payroll. So every time we charge payroll, we take a percentage of that cost and spread it out to the department. So your personnel cost does include all those costs. The unfunded portion, we don't charge it to the departments. We don't allocate it in personnel. We pay it out of a non-departmental category. And so each year we get an actuarial report from CalPERS, and I use that. And I'll cover that later on. I'll show you a slide with that information. We basically take the actuarial report and then just take the payment and make a payment in July. And typically, we just make a lump sum payment. And we do budget for it in the budget. And I can refer you also to the page that speaks to that. So it will be attachment D. Attachment D is the fiscal year 23, 24, and 24, 25 general fund expenditure detail, and is on page 12. Page 12 of 13. So if you go to that page, below and the bottom of the sheet, you're going to see non-departmental. So that's where that payment is coming out of. It's coming out of non-departmental, and we budget for it. It increased slightly, not too much. So this current year, the budget is at $353,000, and the next 2 years is going up by slightly about $5,000, and then another $2,000. So it's not too much. First year is 359, and the second year is 361,000.
Are those numbers based on the actuarial thing?
Yes.
Or are you having to just project?
It's not a projection. It's based on the actual reports from
CalPERS has given
CalPERS.
you those?
Yes, yeah, it's pretty spot on. So these numbers are taken from actuarial reports. For PERS miscellaneous, PERS safety, PEPRA miscellaneous, and PEPRA safety. So those are the four main categories that we pay. And PEPRA, we don't really have a UAL because we pay as you go, and it's pretty spot on. And PEPRA safety is pretty spot on too. It's the PERS miscellaneous and PERS safety that we have to pay the UAL payment. It's a one-time payment every year in the early July.
If I can interject, per the council's policy and our past practice, I believe it's effective July 1 of this year. The PEPRA employees are going to be paying about 1% more. So if an employee makes $50,000 a year, they're going to pay $500 more per year. So the employee share it moves. So when the costs go up, they pay more, and if the costs go down, I don't know if there's an adjustment, but just know we're adhering to the policy.
Is that a town of Moraga policy, or is that the PEPRA rules?
That's the CalPERS rule.
Yeah.
They make the adjustment. So they're trying not to have too big of a UAL. That's why they calculate every year to make sure they're charging the cities appropriately.
Yeah, and it's absorbed by the employees.
And then, Annie, so we put $1.5 million in a pension trust, and that's not, contributions from there is not in 20, I know, obviously it's not going to be in 23, 24, but it's not in 24, 25, or is it?
That's correct. I'm glad you brought that up. Yes, if you recall, the chart was that the UAL is going to escalate in 28 or something. That's when we need it. If the payment goes above 900,
Right.
we're going to tap into that Section 115 and use some of that money to pay the any payments that are more than 900,000.
900,000.
900,000.
Yeah, okay, thank you.
Yes, yeah, if the total payments doesn't exceed 900,000, we won't touch a section 115. It's only if needed. Yeah. And that account is actually doing really well, I'm pleased to report, yeah. So good choice. Yeah, I was so pleased that we established it, because it's earning some good interest.
Do you have a policy for reporting that somehow to council periodically?
We can, basically, we can do a cash report, because the last time we reported the cash balances, we show each account, we show our checking, we show our money market, we show our section 115. So yes, we can definitely do that on a quarterly basis.
I think something like that, at least for this committee and probably for council, would
Yes,
make
yes,
sense.
yeah, because it's pretty good news in terms, the market's doing well. I mean, we really don't have control over the market, but so far, it's turned out to be a good investment.
We'll maintain a list of follow-up items to make sure we get to that. I'd like to point out before you move this on, these items.
Is your mic on, Scott?
I'm still learning here, sorry. Yeah. I'm just going to leave it on, that's a good question. So, of the items up here, the main driver to the increase in appropriations for each year are the employee labor contracts. That's not a judgmental or a statement, it's just we are committed to that first, so that is the main driver. Yes, we also have costs due to inflation and the rise, the impact of the minimum wage increase, which impacts our professional service agreements, but just know that's the lion's share of the increase.
So one of the questions I was going to ask on that is, you've got 3% in there because that's in the contract for year one. What's in the contract for year two?
It's also 3%. We have a 3-year contract.
And so it's 3% each year.
Yes,
Yeah, and it was negotiated last spring.
yes.
Yeah.
So-
And that's in the budget, I'm sure.
Correct. So the escalator clause is 3% on all personnel costs. And pretty much also for O&M, unless there's evidence saying it's going up or down, then we use the new rate. Okay, next up. Personnel costs, so that it is the largest expenditure in our operating budget. It makes up 63% of the total operating budget. Right now, we're budgeting for 41.35 FTE in the first year and second year, no change. We're not proposing to add any positions at this time.
Annie, just a question, that
Yes.
63%, is that fairly constant year to year?
It varies. I was doing some analysis, and it does fluctuate a bit. Let me show you. I think sometimes it's 70%. Some organization I've seen as high as 80%, so 63% is pretty good.
And that's salaries plus all the benefits that go with it.
Yes, it's all the personnel costs lumped together.
So that's fully loaded, and you said that comparable, well, we know there are no comparables in Moraga, right? We're unique.
Very unique.
Yes, but just looking across other public agencies, the 63% is well within line.
Yes, yes, yeah. My last organization, I think it was about 70, roughly about 70%.
Okay.
Yeah, our O&M is about 37%, so our O&M takes a big chunk from our budget as well. But 63% is actually pretty good.
Okay, thank you.
Thanks. Okay, next up, personnel expenditure by department. So this is a breakdown. I took the data of all the personnel costs within the general fund, and I broke it down by department. So for police, it is our biggest department. The year one is estimated to be 3.1 million. Year two is 3.2 million. Public Works is the second largest department. It's estimated to be 1.4 million in year one and 1.4 million in year two. Admin services, this comprises of finance, admin, town clerk, town manager, all the miscellaneous department cobbled together. That is 1.3 million. That's the third largest department, and 1.3 million in year 1 and 1.3 million in year 2. Parks and Rec, their proposed budget is about 958,000 in the first year and 985,000 in the second year. It's slightly down because there's some O&M that's 957. I think. Oh no, it's up. Sorry, the O&M was slightly down, but yeah, it's going up. And planning is the smallest department in the town, 784,000 in the first year and 807 in the second year. So total personnel costs is going to be about 7.5 million in the first year and 7.7 in the second year. So I took a look at what the personnel cost is with regards to our budget, and that's how I came up with the 63%. Personnel cost as a budget percentage is about 63% of our total operating budget in the general fund. So that's how it was calculated.
Annie, just another suggestion. I would combine this slide with the prior slide and just do this one.
Combine this?
I would, yeah.
Okay,
And I might, if for me, when I look at it, I'm also thinking FTEs. And while you say 41.35 total, I might put like police and then in parens whatever it is for 12 FTEs.
Oh, the number of
My suggestion was
FTE?
going to be a column between the department and whatever with the number of people, FTEs applied, that comes down to a total of the 41.35.
Yeah, great minds think alike, Bob.
Yeah, I think that would make a lot of sense. Doing an additional column after the department with FTE and then the total FTE and then consolidating the two slides.
Right, and you're also saying that the FTEs are going to stay the same between 23, 24
Yes.
and 24, 25?
Yeah.
Okay, so
It's the
just make
same.
that
There's no
clear that
change.
that's not going to change.
Yeah, so I'll add a column between department and proposed fiscal year 23-24, since it's going to be the
Okay,
same for both
thank you.
years. Thank you.
And I agree, you could lose slide 18 then.
Yeah, definitely consolidating, making it simpler. Thank you for the suggestion. Okay, next up. Operations and maintenance. This is the non-personnel piece of our budget. The total is about 37% of the total operating budget. And the biggest chunk of the operations and maintenance is, again, the non-departmental budget, which includes the CalPERS payment as well as the insurance payments, insurance premiums. Those are going up significantly. So this is where I want to talk about the annual CalPERS pension liability payment, insurance, townwide expenditures. So those three factors made up of all non-departmental budget. So CalPERS unfunded liability we went over earlier. Insurance premium has increased significantly, and also townwide expenditure has increased. So this is the O&M expenditures by department. This is all the non-personnel costs that each department incurs. For Parks and Rec, the proposed year 1 budget is 824,000. In year 2, 807,000. It's going down slightly because there were some costs that are in year 1 that's not going to happen in year 2. It's mostly library contracts. And then for police, year 1 is about 755,000. Year 2 is 778,000. For admin services, first year is 752,000. Second year is 788,000. For public works, O&M totals about 561,000 in the year 1 and 582 in year 2. For planning, they have the smallest budget because, as town manager mentioned earlier, a lot of the contract services were cut in terms of, because we can't really afford those contracts. We'll come back to town council as needed for those special contracts. Planning is projected to have a budget of about 79,000 in year 1, and in year 2, 101,000. The total operating budget for all the departments is about 2.97 million in year one and 3.06 million in year two. And like I mentioned earlier, as a percentage of budget is 27% of our total budget.
Annie, I think, but it says 37 in the prior slide, so.
Oh, so that's a mistake. It should be 27 because 27 plus 63.
Well,
63.
Yeah.
My
Should be
guess
30.
is that you've got things like the CalPERS unfunded liabilities and some other.
That's true.
non-department-
That's true.
My suggestion would be that you include a line that would include that.
The non-departmental, I will cover in this one. These are the non-departmental. So I have personnel, O&M for each department and a non-department.
But your 37% includes the
The
departmental. and
non-departmental.
Okay, so if I take the 27% from the O&M and I add the CalPERS unfunded liability payments, that gets me to 37?
I don't think so.
I think it should be 37. We'll double check the math.
Yeah, but you see that where this could be confusing,
Right,
Annie. And
right.
so you might not, I mean,
So what I can do is add the non-departmental together and just group them all in O&M. Because I was trying to break it into 3 categories, but I can do break
I
it down.
think it would be clearest to have O&M that's going to come down to the 37%. And so you have the departments, and then you have non-department, or if you want to make the CalPERS a separate line item, and then that'll match out to the 37%. And I'm not sure you need to break down the CalPERS
Yeah,
unfunded liability to each type, because
so I
what
can
people
lump
kind
it.
of want to know is what's the grand total.
Yeah, so it might be easier just to lump it. I think that's a good
Yeah,
suggestion.
we'll do that, but the non-departmental is O&M.
Yeah, it is, but I was trying to show like the,
And what sets
The
us
detail.
apart is usually you have 3 categories. You have personnel, O&M, and capital outlay, and perhaps capital outlay and capital improvements. So the general fund really is not doing capital outlay or capital improvements. You have the capital, you have the asset replacement that's done retroactively. So very, very lean budget.
yeah, one other, I mean, I'm looking at the O&M expenditures by department, and I'm trying to figure out what I'm learning from the departmental breakdown. I mean, on a salary basis, it makes sense to do it by department. But think about, Annie, whether, for the purposes of the slides, I mean, because all this detail is in here, right?
Right,
It's in the
it's
staff
all
report,
in
it's
the-
in the intent.
right.
But for purposes of the slides, if you just want to have departmental O&M, bam, non-departmental O&M,
oh, okay, that
bam,
makes it,
percent of operating budget,
Yeah.
37%, done.
okay, that would make it much easier. Then I can get rid of this. I mean, this is more information.
Because you can assume that the council has read every single attachment,
Okay.
knows all. Well, we haven't memorized the numbers. Don't quiz me because I will fail. But it has gone through the detail, and for the purposes of
Yeah.
the slides, you just want to give the flavor of the 37%. 27% of that is departmental O&M. 10% is this other stuff,
Right,
and that
right.
and the other stuff is pensions and whatever else.
That's a good suggestion because I don't need to show all these details. This is more.
Not for the slides. I don't.
Okay.
If a council member is interested or a member of the public is
Yeah, we
interested, they
have
go to the schedule.
Yeah, okay.
That's great feedback, because when I asked Annie, you know, what are you basing the foundation of this? And well, this is how we've done it before, so now we're evolving, so we appreciate the input.
Yeah, yeah. We took what we learned last year and tried to, apply this year. So as each year, we're going to streamline this.
So one approach you might take, and the slide may get too busy, would be basically on one slide put the departments and total and subtotal at personnel, and then put the 2 additional, departmental OEM and then the CalPERS or whatever, coming down to your grand total. And for the percentages, we already got one column in here for FTEs, another column for the percent of total coming down to 100%.
We could do
Okay.
that, percent for
And
each,
that might,
yeah. That helps illustrate it, but, yeah.
Yeah,
Play
I
around
can
with that.
consolidate it
Yeah.
and just lump all O&M together and get rid of all the details.
Yeah,
Yes.
we can do
okay.
that.
Yes, that should be easy. All right, so these are, again, details. I don't know if council would want to see this. This is the detail from the actuarial report, and this was what I spoke about earlier. It increased slightly, not too much. So right now, we're a total of 651,000 in the first year and 650 in the second year. So when we get to 900,000, that's when we tap into the Section 115 to make that extra payment. So. Performance measure, town manager will cover performance measures. I'm going to turn it over to Scott.
Yeah. I think I'd like to do the performance measures and then talk about challenges and opportunities and then go to CIP. I think
Oh, okay.
I think the
Which
the
should-
committee here is in the mindset of that.
Yeah, so
Okay.
we'll say CIP last.
Yeah.
Okay.
And,
Sean?
and if we may, before we go to see, the committee members may have other comments on the budget.
Yeah, perfect.
Yeah.
So Sean, I know you're chomping at the bit, so a few more minutes. So performance measures, we are going to add these for the first time to the budget, and we're starting slow. Each department's going to have a handful of performance measures that'll be delineated. And this is really important. I've been using performance measures my entire career. Now, we know that in the past, the town's been hesitant or reticent, if you will, because having performance measures can be very staff involved, right? So we're not going to have the full dashboard metrics and all that. We will hopefully over time, but we're going to start slow, walk before, or crawl before you walk before you run, and that type of thing. So it's important that we do this so we can show the transparency and accountability to the residents and to the council. But more important, and I've shared this with the town council, I'm going to use these and tie them directly into each department head's annual evaluation. So whatever's in there. Now, we'll do it with the council's goals and objectives that we talked about earlier, and these measures, and then I will also be judged annually in my review with town council. So this is going to put everybody, all of us are going to have skin in the game, and we're going to be connected to the budget. So it's a great tool, and it shows accountability. And bond rating agencies, they look for this, and it's really important. So we don't have those yet, but we will when we have the budget hearing.
So give us a couple of examples of the types of things you would have for
Sure.
for the department.
And we'll tie it to the council's goals and objectives strategic plan. So we know that the Reams Center and the Moraga Center are very important. So we might say things that we know we have applications in the queue, so we'll have get some decisions made on those applications. Or you could do it on the police department side. If a goal was to improve the response time, you could set a target for that. So whatever, again, I'll tie it back to council direction, but it'll be these type of things. So we can show things that are tangible and measurable. It's very important. And without this, really, we could be spinning in circles. Okay, now we want to shift to challenges. Okay, these are just a sample. These are evolving. We'll be more focused by the time we have the proposed budget document and we get into the budget hearing on June 14th. So here's how we see it. Here's how I see it as the new town manager. We are struggling with maintaining a structurally balanced budget on a recurring basis. The budget, the two budgets that are before you, there's some one-time money coming in, like we talked about the capital replacement, or the asset replacement. We're going to figure out a way so we can be structurally balanced. We've made a lot of progress. We're on track, but that's a challenge. The ability to maintain the existing service levels. I think that's been the mantra for Moraga from the day it incorporated back in 1974. We were set up, for not a value or judgment here, but we were set up to be a very low-tax city providing minimal levels of service. You know that. You live here. You've heard it the whole time you've been here. But there are many communities, cities and communities around us that have higher service levels. And so we live in that reality. I've told the department heads we're not going to complain about it, we're not going to whine about it, we're going to do the very best with the limited resources we have. But that is a challenge. It's not insurmountable, but it's a challenge. And the ability to provide enhanced or new services. What I've heard in my limited time here so far, when I'm out and about in the community, when I'm out at the parks, or I'm just listening to people, why don't we have lacrosse fields? Why don't we have this, that, or the other thing? So
we're not able to go into enhanced or new services easily here. We're struggling to just fill the potholes. So that is a challenge for us. The ability to retain and attract talented employees, that's a challenge. I think under the council's leadership, we're doing a better job, but it is a challenge for us. We had a very talented employee in another department that had a job offer from a booming city, bless you, a booming city in this region. But that person decided to stay here for the commitment to the community and the love of the work here, even though there's more money to be made and more resources in the organization. So we want to build a good culture. That's a challenge. We may be moving to a recession. I actually think we're in a recession right now. We just don't know it, and we'll come out of it in the next year or so, but that's a challenge. We go to the next slide. The challenges continue. We may be in a housing bubble, maybe. Not sure, but there's a lot of literature out there that says the Bay Area could be. And so we have to be cognizant of that, because if that pops, then that would have a rippling effect on property tax revenues, maybe. Rising liability and workers' comp premiums, you've heard about that, big challenge. We'd like you to know we're doing our level best to drive down costs and claims in our organization. I believe this organization does a good job, but because we're small, one claim could impact our insurance premiums. And by the way, we will look at, I've charged Annie, I do want to take a look at the possibility of joining another insurance pool. It's not saying we're going to recommend we pull out, but just like if your homeowner's insurance goes up, what do? You look at other possibilities. That's what we're going to do. We're going to ask the existing pool to sharpen its pencil to make sure our taxpayers are not being overcharged. I'm very concerned about that. High levels of inflation. We haven't seen inflation like this since the early 1980s. It's a challenge. And then the rising minimum wage. It's great that the minimum wage goes up for those on the lower end, but what happens when the minimum wage goes up above and beyond inflation? It pushes compensation for everybody else, which pushes the whole budget up along with it. And then rising medical insurance premiums. We are in a age-based insurance pool here, which creates incentives to hire younger employees. So that's good if you have a really young workforce, but if you want talent and experienced workers, it drives up the cost. So we're going to take a look at that during the year. Next one. And I promise we're almost through the challenges. The Hacienda facility, there are significant management and neighborhood interface issues. I can't get into a lot of the details other than saying town council's given me very clear direction in this area. We know it's a challenge. We are committed to dealing with this. Asset replacement program, lack of internal service funds, we've covered that. There is a need for a senior civil engineer, and I've already advised council that we will come back with a recommendation to put this position in the budget, but not through this budget process, but later. The capital improvement program that Sean's going to walk you through, several of the projects actually include funding for this position, largely funded, not so much through the general fund, but funded through Measure K and so on. We are taking on so many Measure K projects, street rehabilitation, drainage projects, storm drainage projects, et cetera, that the staff is overwhelmed. So we have a way to make this cost effective, which will show a greater return on our investment, and we want to deliver the capital projects that this community is desperately waiting on. So we'll talk about that. The commitment, though, I do want to stress on the record, is not to hit the general fund's recurring or the general fund budget with this. Council's made it clear, no new headcount unless you have offsetting revenues or funding sources. Then public infrastructure, facilities, landscaping, entry points, and so on, we are lacking, and it's evident. It's evident when you compare us to other communities. This is a very wealthy, successful community where people spend a lot of money to live here. The infrastructure is not reflective of the wealth in the neighborhoods here, and I'm committed to this council to fix that. We are aware of that. And we do have a weak local economy here in Moraga. It's not a value statement, we're weak. And part of that we're set up by design, but that's a challenge for us, not insurmountable though. Next one. Almost done. Lack of revenue diversity. So I'll tell you, it's great that property tax is at 50% or more. That means when there's a recession or radical change, we can survive it. It's a blessing and a curse. The curse is when hotel revenues are up and the economy's cranking, we don't really feel it right away. So blessing and a curse. The ability to attain long-term financial sustainability and security. I see that as a challenge here. the glass is half full, not half empty, but it is a challenge. And then we go to the next one. Okay, now let's flip it around, opportunities. Moraga is a great place. I'm thrilled to be here to be your city or town manager. So here's a real strength. We have a visionary and focused town council. They may not vote 5-0 on land use and other things, but they are committed to good government and fiscal responsibility, and they take their fiduciary role seriously. And that is a great thing. The street rehab program, Measure K funding, we're shifting into high gear now. Millions of dollars are being spent every year. In fact, the residents know it right now. And so just wait over the next 2, 3, 4 years. We're going to do even more projects. So I'm really pleased. And I can't get into details now, but we will provide clarity to the community about Measure K funds and how they're used and what type of projects that they're spent on. And I'm committed to this council to make that a more positive and clear answer. And related to the Measure K is the enhanced drainage capital improvement projects, so lots of good things going on there. On the housing element, the housing front, with the new RENA numbers and increased housing density that the council approved, on balance, it's a good thing, and we need to stress, not a value statement, but I would like to stress the council's made it clear the top priority of this municipality is to protect the integrity of the residential R1 single-family neighborhoods. This council is not proposing going in and making changes there. The council has decided, though, to adhere to the state's numbers, the 1,100 plus units we have to accommodate, that will be infill development in the multifamily zoning area as well as in the 2 commercial centers. We have the ability to do that. It's a great thing, by the way. It's an exciting thing that this council has done that. That's an incredible opportunity because with that type of development with these 2 town centers or retail centers there's incredible value capture opportunity. Housing is going to be a driver here. It will not have a negative impact on quality of life in the town. On balance, it'll be a good thing. So the Moraga Center redevelopment, and the next slide will probably say the Ream Center redevelopment. Bingo. That'll be a catalyst and a good thing. The Bollinger Canyon, the zoning that the council did, it's a good thing to have clarity on that. Commons Park improvements, we see that as an opportunity. This is one example at 1600 School Road. There's a proposed housing development, market rate apartments with some very low and low income requirements. There'll be a few dozen units. They'll be very nicely done. The Palos Colorado's housing development. It looks like that's going to happen eventually, and that creates some opportunities associated with that. Go to the next slide.
Maybe.
Yeah, I'm seeing the glass half full here. So town facilities, energy generation study, and possible projects. This should be a good thing. This is a community that cares about the environment, and by extension, we as its municipality care about our impact on that with our facilities. So we're trying to be smarter and better and more self-reliant. We do have energy reliability problems at City Hall and with the Town Hall and with the police department. We know that. So we have an opportunity to do some refundings with the certificates of participation. There's a couple outstanding bonds that we could generate savings upfront and recurring. We do factor that into the second year of the budget. We do plan as staff to come in front of council in the next month or two to get authorization to study it. Even though rates are rising, they're still lower than when back in 2013 when we did the issue. So like a good homeowner, when you have the ability to lower your debt service, you should take a look at it. We're not recommending extending the debt. Just want to lower the cost of the debt. This is something very near and dear to my heart. I've built a career on doing long-term financial strategic planning, and we are interested in moving out to doing 10-year forecasting and having the council go through the process to do a true long-term financial strategic plan. It's a visionary exercise, and you can do community engagement as part of that process. I mentioned the use of performance measures. We're going to do that. And then I want to stress the town-gown relationship with St. Mary's College. We know the college is going through some leadership changes, but we view that as a great opportunity to do more, especially on the retail property that it owns. The La Miranda cooperation between The relationship with Lafayette, Orinda, and Moraga is special, and we do like the Smart Signals project, so we cooperate very well. The 3 city managers work well, and we know the 15 elected council members have close bonds. With the fire district, the Moraga, Orinda Fire District, incredible opportunities there. They want to build a new headquarters here in Moraga and a new fire station. So that should result in, if not enhanced services, just more reliable, more dependable services over the long haul. The library facility, we're looking at some improvements now. It's in the budget, and we hope to be able to do more. And I want to stress the commitment to building a first-class executive team and overall organization. We want the employees to feel valued and to be part of the future of this community. And we like to lead by example instead of being made to feel like an example. And I think that's it, right? Yes. So that's it. You can ask questions now if you like, or we can go to the CIP.
Should we just wrap this, just put the budget to bed?
For me, I
Operational.
pretty well asked all the questions.
Yeah.
Let me,
Amy, you
Yeah, I
haven't had a chance. We've been talking the whole time.
No, that's okay. I had circled a bunch of things, and you guys hit a lot of my questions. I was just wondering if there's a way to talk about how you've met some of the goals that you start out with in the budget as you're going through it.
Yeah, and so ideally, the answer is we don't have that right now. Okay, but ideally, when we come to council mid-year, we do a report card. How have we done for the first 6 months? How have we done? And then they set their goals for the next cycle. And I believe they did they do an update? Did staff? I don't know.
We did an update back in February.
Okay, back in February. We don't have that for you or the council as part of the budget now, but we will do that. We'll do 6 months and 1 year, and then 6 months, and then another year.
Yeah, Amy, historically, there's a timing issue here, right? Because the budget is July 1. The council goals are set January. And so typically the report out to the community on the achievement of the goals that we set at the beginning of the year happens in December, when the mayor is leaving and sort of does the recap. That's been traditional. That's not necessarily how one should continue doing it, but that is how we've been doing it. So what Scott is saying is actually additive to what we've usually done, because we have not typically had sort of a mid-year check-in on the achievement of the goals. The goals are stated in the budget for the year, and the role of the goals is discussed, but that historically has not happened, but obviously Scott's going to.
And we'll figure out to do it. And so when the fiscal year ends, a few months after that, we'll have to have a report back on how we've done. Thank you for asking that.
I've tortured Annie
No, thank you very much.
I think we've covered almost all the items, and I know this is a work in progress. Having the page numbers would be desirable so that when you're referring to it. Some of the sections are page numbered and others aren't, so you.
Oh, right, because it's a combination of different.
Once you finalize.
Yes, we'll
would
put
probably be
page
helpful to
numbering.
council.
Yes, agree. Thank you. Thank you so much for your suggestions, and I really appreciate it. It will make the slides a lot more succinct.
Yeah, and Annie, just to be clear, I mean, I know we made a lot of suggestions, but the work is outstanding. I love the 2-year
Yeah.
budget. It's fantastic. The presentation of the information is very good and very clear. So hopefully these are enhancements.
Yes,
And you're
yes.
viewing these as enhancements and not as, not being constructive.
Oh, yes. I appreciate all constructive, feedback. This helps a lot. And with the 2-year, I'm sure that next year it will be a breeze. So this is what motivates me. Okay, I'm going to get this done.
Okay, so I think we're done with item 5. I want to open it up for public comments if there are any. Not seeing any, we'll move on to item 6.
Okay, thank you.
The consider proposed draft 5-year capital improvement program and budget for the 2 fiscal years we've been talking about.
Sean, do you want these handed out? Do you want us to have these?
Please. My bad, sorry about that.
No, that's all right. Oh, my picture's on here. Could you please change that? That's my first suggestion.
Yeah, the Photoshop, that's,
Get rid of my picture.
I apologize.
Oh, no worries, no worries.
Anything else you know? Yes, sir. Andy, do you need one?
Wait for Scott to return? Should we wait for Scott to return? Okay. Good evening. I'm Sean Knapp, your Public Works Director and Town Engineer. Thank you, Treasurer and Committee member, for being here, in addition to the Mayor and other staff. I'm going to be going over a proposed CIP budget. As you've been told previously, it'll be a biannual budget. The first 2 years will be the allocated years where we're recommending allocation of funds, and then the next 3 years of the 5-year proposed budget are just estimates or forecasts for the future years. I'll just start going through the slides. There will be some repeats. Andy covered a lot of information, so luckily we'll get to move through some of this pretty quickly. And here's a quick overview. We're going to talk about the preliminary CIP budget, talk about some completed projects, or these are estimated to be completed within the next months or so here. And then we'll have our new or ongoing or scheduled project proposals, and a really brief look at unfunded and unscheduled projects. And then I'll welcome any conversation or questions during the presentation or after. Annie did cover all of the town goals, and there was some lively discussion about it. There is 8 goals that are related to the CIP. I'm not going to go over it because you've seen it already, but just know they're out of the total of the goals, the town goals. There are 8 that are focused in some way towards the CIP. The CIP is composed of several categories, including buildings, creeks and drainage, parks and open space, transportation, general government, and asset management. For this year, we do not have any general government category. Most of those were in kind of planning projects, steady projects, and we've moved those into operations. And some of those, that type of outlay, because it doesn't lead to a planning project or a scoping project, may lead to development of maybe a future project, but it's not directly tied to a construction project. And then asset management, those projects are folded into the other 4 categories above as we move through the planning process for the CIP. Quickly, just some of the projects that we've completed this past fiscal year will be completed by the end of the year. The Moraga Library carpet replacement. We have a little bit to do on the town facility energy generation. It's a study. It's actually be coming up, I think, on June 14th. We'll have the last of that information coming out of town council. The Canyon Road Bridge is nearing completion. We have a few minor punch list items. Every year, we have a minor traffic safety program where we go over features that we add and address issues out there with a minor budget. We completed last year's or the year before, 2021, had several phases of work for the pavement resurfacing. We completed both the Moraga Road and Canyon Road Complete Streets conceptual design. That led to a grant application award about $3 million in federal funds. We've completed our local road safety plan, and that led to 2 significant grant awards for safety improvements for traffic striping and signage. Completed the Bollingen Canyon special study, and then implementation of the 6th cycle RMHN, which were in the general category but in planning, but we don't have those type of projects into the future. So this is a quick summary of the projects that came out of asset replacement. It doesn't look at kind of capital purchases for like replacements of cars, like vehicles, police cars or public works cars and other like IT infrastructure. It's looking at, these are what makes it into the CIP. One note, staff is suggesting one of the projects, major projects, was the pavilion staircase replacement because of balancing general fund expenditures going into asset replacement projects. We recommended pushing that out a couple of years so it doesn't appear in the first 2 years and appears later on. So if you were looking at the asset replacement staff report that was presented in April, there's a couple projects that came out of that. We made some slight adjustments based on some estimates, refined estimates over that month, and it came up with this proposal for asset replacement in the 2 years. Normally, we only plan for 1 year. We go 1 year, but now we're doing a biennial budget, so we're kind of stretching our dollar a little bit also to get into the second year. And at the conclusion of the upcoming fiscal year, there might be additional savings to put back into asset replacement for the following year and such. And so this is an estimate for trying to cover 2 years with asset replacement funding. I'm not going to read all this, but the intent of it is every available resource or funding source that could be used for the CIP proposal has been delved into. Most of or all funding is coming from restricted funds, except for the funds that came out of general fund from the asset replacement, which fund those 3 or 4 projects. Everything else is coming out of restricted funds. We do have a very robust capital improvement program with, and it's managed by 4 engineers. They complete an average of 11 to 12 projects per year. Over the 2-year period, we have about 30 ongoing or new projects planned. And just some highlights, we are doing about $13.4 million over a 3-year period. That's the largest investment the town has in pavement, and we're doing significant work right now in construction. We are in construction season, so if you drive around the town, you'll rather see a bunch of construction vehicles moving in and out around town as they're working on streets. We do have a $1.7 million storm drain program. It's actually one project, and that's courtesy of ARPA funding. We don't have a revenue stream to do storm drains currently, but luckily with the ARPA funding, we've been able to do a number of projects, and moving forward. We did do an analysis of our storm drains with about 30,000 linear feet of inspection, and the needs are about, of the worst storm drains repairs is about 3 times that particular amount. So into the future, we'll be looking at different revenue sources that we can potentially continue funding storm drain projects. And then we have about just over $14.5 million in transportation safety projects, about 12 projects. Much of that, of course, is restricted funds or the grant funds that the town has been able to attain. So I'll just quickly go over, pass through these tables. Again, they are broken down into the different categories. I trying to make it a little easier to follow in that the top half is kind of ongoing projects. I mentioned the Pavilion Flagstaff staircase. That will not be moving forward, but this is part of the older table. But all the other projects were either predicted for now or in the upcoming schedules. And the new projects, new proposed projects are here, shown here. And again, we're looking for the first 2 years for allocation. I'll move to the next category. It's creeks and drainage. I mentioned that the first project was that $1.7 million annual storm drain repairs. We also have another one, Moraga Road drainage going on. The third one is the Laguna Creek restoration, which is the daylighting of the Laguna Creek. We are waiting for FEMA to give us the okay to move to final design and in construction. So that's predicted as a very positive project for the hacienda. And then we have 3 remaining projects which are not funded at this point, but if we're able to find a revenue source such as Measure K, where we can do a cutout about $600,000 per year, we like to continue our storm drain program that we've had a lot of success with of late. In the area of parks and open space, there is 2 projects that are either ongoing or will be started soon. Ongoing construction currently is the Commons Park picnic area, which they are pouring foundations currently. And then the following project to follow that would be the restroom replacement. And then we have a number of new projects in the parks and open space. That's the bottom half of the table there. And these are mostly infrastructure projects making repairs of existing facilities. And then moving into transportation, the transportation is our very largest category of CIP projects, and that's because we have more funding, dedicated funding sources, gas tax, Measure K, garbage impact, vehicle fees, and numerous grants that fund this category. In the area of maintenance, we continue to do our pavement maintenance projects, as we mentioned, on a yearly basis. We have other kind of annual projects, annual street repairs and such that support doing those pothole repairs and such. And some committed projects that we have, finishing up the bridge. We have a riparian rehabilitation project, which is basically maintaining plantings and trees and things for a 5-year period based on the environmental permitting for that bridge. And those were like impacts. And then looking into the next category is quite robust, safety program. We have a number of safety projects which are mostly funded through grants, but we have some restricted funds also helping those projects, like the LFA funds, which are meant to help safety and traffic mitigation issues within the town. Those are developer impact fees that we're utilizing. So, heading it off with Cordless Safe Routes to School project is a big project, a lot of public outreach, working with the community. And then we have about 3 different highway safety improvement projects, grant projects for traffic safety relative to putting in signage and traffic striping throughout the town. And I mentioned earlier our major project that we just got funding for, it's under the new projects, is the Moraga and Canyon Road Complete Streets project from St. Mary's to Sanders. We've got about $3 million of safe streets for all grants, helping fund that, and it's going to be a nice addition to the downtown area. I think also Scott mentioned earlier our smart signals projects. We have 2 different grants to help integrate, upgrade, and synchronize our traffic signals within the town, including helping function during its outages, keeping them running, and then also helping with evacuation as necessary. So those are very important grants, and we're working with our La Miranda partners Orinda and Lafayette on that project. I'm going to briefly go over our unfunded, unscheduled projects. This list hasn't changed over several years. What does come out of this list is some projects, some components of some of these projects do incorporate it into other projects as we move forward. So, it's not that they're lost, but we wanted to keep an eye on this as these are former, desired projects of the town. And at one point, we're going to do some studies looking at our open space and park needs, and these things will be folded into consideration going forward. Just continuation of traffic-type projects in our transportation. These are desired projects that we've looked at in the past, and as we find funding, they may be brought forward to the council to consider. So that's the end of my formal presentation. I welcome any questions, discussion.
Does Amy want to have anything?
Amy, do you have any questions, comments?
I'm just wondering if you could change any of this, what would you change?
Change.
Yeah, like, a lot of this is scheduled, but then you've got unscheduled things. Are you satisfied with what's scheduled, or would you make a recommendation to maybe take something unfunded and push it up? Or?
Yeah, that's good questions. Currently, we have a number of projects that are on the scheduled into the future years that still do not have funding sources. And so, because of that, we're not looking to add any projects. Every project that is funded, it doesn't have any excess funding at this time. We have more projects than we probably have capacity for, and our town manager had mentioned that we're looking to add a position potentially into the future, utilizing the restricted funds that we already have. Every project has a breakdown of a cost between administration, construction, environmental, permitting. There's all these different categories that go into, designing a project, constructing a project. And there's a section for, out there for project management through the town staff. And so without the staff, we don't have a project to move forward. And so if it's possible to fund through our current budget, because the projects all have budget in it, we would like to add a staff to do more. We're at a point where we have a number of projects, more than we can handle, just because it's just the amount, and then the construction cost goes up over time. So when we delay a project and we come back to it another year or two, the price has actually gone up. So we're actually losing money by not employing somebody. We're thinking we're saving money, but we're deferring the work, and then the work becomes more expensive and in subsequent years. And we've seen a radical increase in construction cost on the last 3 years, and so everything keeps going up. So deferring it is a lost opportunity.
Bless you.
So is the new civil engineer drafted into the budget already? No.
Not at this time. Yeah, not at this time. And again, I'm new. I didn't want to rush through it. So we did share with council that we would study it and come back later.
Thank you.
Mayor Sass?
You want me to go? Okay, thank you, Bob. Sean, this is outstanding, as always. I have thoughts and questions, so if I can mix them up, I would
Sure.
I would appreciate it. The one thing the two numbers jumped out at me, and that was,
Is it on a certain page?
well, actually three. The amount we're spending on creeks and drainage and storm drains, the amount we're spending on traffic safety improvements, and the amount we're spending on transportation. So it's in your staff report on where you have those tables, pages 4, 5, and 6. One suggestion I would have, Sean, is what either in the staff report or in the presentation, tie that to the goals, because the town council has said pedestrian safety, traffic safety, cyclist safety is paramount, and we're going to spend $4.9 million on that alone. You see my point? And then infrastructure is important. We have X amount budgeted. So of the total, what is it, 14 million? Safety is a certain percentage, transportation is a certain percentage, and that directly ties to the goals. So I don't think that takes a lot of work. It's just a matter of presentation, because those are really important, I think, figures. So Parks and Open Space has got 0 in fiscal year 24-25. Is that right?
Yes, that is correct. So much of the Parks and Open Space funding is really coming through asset replacement.
Through asset replacement.
And we're doing a budget for 2 years. Normally, we do it 1 year at a time. So this is, what we have is kind of typical.
Okay.
And next year, we may have additional funds that we could fill that gap
Okay.
with the following year.
All right, now I'm going to ask about a couple specific projects. My apologies. The Hacienda trash enclosure. So that's pushed to 25-26, which is fine. 225,000, which I understand 100,000 is assumed to be coming out of the Recycle Smart Reserve, and the 125 from somewhere else. Does it have to be where it is?
The placement in the
The
schedule?
placement, yeah. I mean, just the dumpsters to begin with.
Yeah, well, based on staffing loads, we've tried to spread out as much as we can. We still don't have enough staff to do all the projects, but
Right.
if we move it forward, some needs to be moved back, moved
Right.
back to place, those kind of things. And so based on the desires of the Park and Rec director, trying to get some of these infrastructure projects that currently exist fixed, that was the ideal, to push this one back, because this one doesn't exist at this point.
Right, and I appreciate that, and I'm not. My question is more foundational. Does the
Location.
trash enclosure, do the garbage? I mean, part of the problem is that these dumpsters are located in a very peculiar place, and they need to be concealed both by law, as I understand it, but also because of where they are. And so my question is, has there been any consideration of whether they can just be moved so that some of these aesthetic problems are avoided? You don't have to answer that now. I'm just raising it.
Well, we'll follow up on that.
Thank you. The Hacienda roof replacement I see is 25-26. Are you comfortable that that's soon enough, Sean?
Yeah, so we just recently completed some roof repairs to try to extend the life, and our typical mode is try to extend the life. The acid replacement had that being replaced several years earlier, but again, we went in and did repairs as leaks occurred, made repairs. We think we can get another couple of years out of it.
So we did some spackling and duct tape, and we're good to go for a couple of years. Okay, and then same question, Sean, on the staircase down to the pavilion and the retaining walls. Are we comfortable that those things can wait as well?
Yeah, we can try to address any issues that are out there to make sure that the public is safe.
Okay, terrific. Just forgive me. On the annual storm, 21-23 annual storm drain repairs, it says project balance note requesting an additional $485,000 for inflation. What does that tie to?
Can you go over that? Which project
Page
number?
20 of the, where the project descriptions are.
Yeah, that should, that you caught a good error in there. So initially, when we were contemplating it, we were going to ask for additional funding for that project, and we at the end we did not, and that note was part of their initial thinking of let's do an additional request. So the 1.7 is the original budget.
Okay.
And the 485 was additional ask that would have come out of ARPA. And based on just, looking at ARPA available funds and other needs within the town, we did not ask ask for additional money.
Okay, so
that-
you'll
that's-
clean that up as
That was
appropriate.
an error on our part.
No worries. Annie, just because I thought of it right now, we still refer to the mulberry tree lease in the budget. It's no longer the mulberry tree. It's now so just, can we change that?
From what to what?
We can change the description.
Yeah, just the description. Sorry, I'm bringing that up, but
That's good.
it popped out of my head. I only have one more sticky notes, fortunately. Oh, yes, the Commons Park spray feature. So I see that's also a 25-26 item, but I guess the question, is for Mackenzie and you is, how are we feeling about the cost benefit of that feature, especially given the water issues?
Yeah, we'll go through a mid-year budget adjustment. We'll come back at a year. There might be opportunities to add things in as we go through it. And so, we're trying to present you with a balanced budget that covers everything going forward with a very conservative revenue stream. If things change and we have savings or there's increase in revenue projections, we can surely move small items forward.
Okay,
Right.
and then
I think you had a concern, though, about the energy, the
about
water
the water
conservation.
usage. Yeah, I mean, I've gotten a lot of emails from residents saying, what are we doing?
Oh, I didn't
Spraying all this
catch.
water.
I'm sorry. When
I was saying
didn't catch that.
I understand it has recreational utility and the
Yeah.
kids love it, but the question is the water use appropriate? That's just the question I'm posing.
Okay.
So as we talk about this, down the line when it comes time to 25, 26, the question is, does one reinvest in this or does one go a different way given the realities of the water?
Yeah, that should be. We should have an in-depth discussion with our Park and Rec director.
Right.
We've installed, some water-saving landscaping and
Yeah.
fixing the irrigation system out there. We do get reports from the East Bay Utility District, Municipal Utility District, on our water usage, particularly for the commons. And so we can do some analysis and see if we've made some improvements and see where we're at with that.
Okay.
So that would be a part of a good analysis.
Okay, thank you. And then just finally, Sean, and you can just tell me I'm consistent because I bring this up every single year, and that is the projects on the unfunded and unscheduled list. I understand why they're there, but I get concerned when I see multi-generational community center to the tune of $9.5 million and community sports fields to the tune of $11 million, and without there being any context. And I'm wondering if you would consider, both in the slides and also in the CIP, to maybe frame it a little more clearly, that these are things that have been identified as potential projects, but there isn't funding, there's no planning, and that this list may change as the town's priorities change or as the council direction change. See what I'm saying? I just don't want people to look at this and come away with the impression that we're going to do a multi-generational community center and a community sports fields. I mean, we may, but I don't want there to
Yeah.
be the impression that this
Sure.
is happening.
Yes. So there's been some discussion at the town council level about doing studies with our future use of our open space and
Right.
in parks. And all this will be, delved into and hashed out in a plan for the future. And so instead of including these as unfunded lists, which we really don't, as engineering has not tackled and tried to dive into for the last 3 or 4 years, we could actually allude to something in our staff report to town council that, future studies may be undertaken as appropriate to look into the future needs of these areas, including, future, infrastructural needs. And so instead of including it, we could just have a short paragraph about, future studies to be done as appropriate.
Yeah, I mean, whatever in your judgment is most transparent and clearest. I just don't want to create a misperception.
Of course.
Thank you. Thank you, Mr. Chair.
So I basically only have a couple of questions or an observation. In looking at the road projects, what I call the Measure K stuff, the resurfacing and that sort of thing, first 2 years, and I may have my numbers a little bit off, are in the 3.5 million, 3.7 million range. And then in the last 3 years, it drops down to the 2 million range. And I went and looked at the 25 pavement project, and Measure K, which should spin off in the $2 million available funds, $2 million, we're only showing 1.3 million going towards that first year. What happens to the other? Where's the other $600,000 or $700,000?
Sure, good question. So the town council, under their direction, has had us focus in these upcoming 3 years, and we're currently in the first year of projects, on what we consider the worst first residential street program. And we've actually kind of saved up in the prior years. We didn't spend as much money because we're trying to save up to do these reconstruction type streets. So we're saving up, spending more now the next 3 years, and then we go into kind of a maintenance mode where we're looking at other needs as we go forward. There is a cutout for the last 3 years of $600,000 if the town council so directs us when we get to budgeting to go into storm drains. So you can take off $600,000 from that into this calculation here.
The 600,000 you're showing for storm drains is basically coming out of Measure K.
Correct. So Measure K is a general sales tax. It could be used for anything that the council so deems.
I know that, but I also know that when Measure K was sold to the voters, it was done under its roads only. And so the storm drain issue, council needs to deal with, and if that's what you're thinking of doing, you probably need to be thinking in terms of the storm drains are helping to drain the roads, and that makes them more reliable, et cetera.
Right.
But, so you have a change 2 years out that's fairly significant, and some of the folks who voted for Measure K will probably be uncomfortable.
Well, it's related infrastructure. Right, but making that nexus that you're pointing out, Bob. Yeah, agree.
Whatever. Which brings up really the point I bring up every year, which is, I know that council has had this approach of let's do the worst first, and that makes a whole bunch of sense because Street Saver will probably, if it does just where can you get the biggest bang for the buck, it will never get to the worst.
Yeah, there's a number of streets.
Money we're spending.
Right.
The concern I have is we've just spent millions and millions of dollars refurbishing a lot of streets. Some of them now are 7 to 10 years old, and you really should be slurry sealing these things to protect them. And I normally think in terms of about 7 years, ideally, you would slurry seal. What are we, I'm concerned that we not let the worst streets issue keep us from protecting the investment we've made in terms of slurry sealing? What's your thoughts and comments on that?
Yeah, that's a great question. So, back in 2020, we were analyzing the system, and we were down to, some low percentage of worst streets. They're the most expensive, and as you mentioned, the Street Saver program would likely, some streets would likely not be done for 15 years or more, as it's trying to go through the system and trying to maximize the PCI, and will only add 1 or 2 bad streets every few cycles because they're the most expensive ones to replace. And so, if you're the resident on that street, you're going to have a hard time supporting Measure K because it's not going to be coming around. But to your point, we looked at and analyzed how low amount of worst streets that we had, and this program is looking at all the residential streets under 50 PCI and trying to eliminate them in 3 construction years. And then after that, we go back to a more traditional balance program where you have the slurry seals, you have the overlays, you have, if you needed, a reconstruction. And we would go back into that very similar pattern. So we're only looking at this on a short-term basis, and as we eliminate these streets, these worst streets, they're gone. You're not coming back to them for the 20, 30 years kind of a thing, other than doing the slurry seals and other type of treatments, and you go into a maintenance mode. So we're trying to get to that maintenance mode where we're at a sweet spot where we don't have to spend as much money reconstructing streets. The longer we wait with these reconstruction streets, the more expensive they get. And so we're at a very good place right now where we can accommodate repairing the streets, the worst streets, within a short 3-year period. That's our desire. And then we go into a more maintenance mode and we get back to business as usual. So it's a wonderful situation to be in. Not very many agencies got to this point, but it's been, with all the help of the community to pass Measure K, all the support and all the good work that's been done with the councils before us, we've gotten to this point. So we're going to reap the benefits at this point, and then we go back into the balance program that you're mentioning.
So after 2 years, we kind of get into the balanced program?
Yes.
Okay.
We're in the first year of the reconstructions. We've got 2 more years of this, and then we go into a more balanced approach.
We don't want to forget the slurry sealing and that sort of thing, because at some point,
Of course not.
it becomes an issue.
Yes.
That's all I have. Any other comments or questions from other members? If not, I will open this for public comment. Seeing none, we'll take it back, and I think that takes care of that. The next item on our agenda is establish the next AFC meeting. What would prompt the next meeting?
The audit?
At this point,
The audit, right?
The audit, yes. We'll come back to the AFC with the audit for fiscal year 2023. And on June 12th, I believe, right, we're scheduled for the interim audit. And then after that, we have the actual audit in October. And we are trying to finish all the audit by December. So probably we'll come back to the AFC in January of 2024.
so when it's time to have that meeting, then you'll send out a
Yes, we'll
request
send
to
that
try to
out.
come up with a time.
Yes.
Anything else? If not, a motion to adjourn?
May I, before motion, I want to thank staff for the excellent work in support of this meeting. And I also want to thank Amy and Bob for being willing to serve this committee. I mean, this was a long meeting. It's a lot of material. So I just want you to know, on behalf of the town, your efforts and your dedication are really appreciated. So thank you so much.
And thank you for all your feedback. It's very valuable feedback that I can take back and improve on the presentation for the town council. Thank you so much.
Thank you. I just want to echo your comments about the staff, all of the work that you guys put into these reports. I think they're really excellent. I was very impressed. And Scott, I loved the opportunities and challenges
Yeah.
section. I thought that was very clarifying. So thank you for that. So yeah, excellent work.
You're welcome. Thank you.
Thank you very much for your support and guidance.
I echo all of those comments. This is a
think-
very difficult thing and a huge amount of work on the part of both of you to do this, but it helps certainly the council and the citizens to know where we're going, and it shows that we're being transparent for everyone.
Yes. And next year, again, there will be a walk in the park.
We'll quote you. We'll quote you next year. This time next year.
If I may, hands-on. Eventually you'll understand how this works. One of the advantages of the two-year cycle, when we get into the second year, staff will be freed up to implement council direction and do some of these capital projects and other things, but we still will be accountable with 6-month updates, and then after the first year, a thorough review, and if council determines there's adjustments that are needed, we can make them. So accountability will still be there, but we'll have more efficient use of a very limited staff. So, thank you.
And with that, do I have a motion to adjourn?
You have a motion to adjourn.
Second?
Yes, second.
We're adjourned.
Thank you.